Welcome to Naples Money Managers news, updates, and portfolio commentary. My name is John Kincaid, and I'm here with my colleagues, Marcus Bickle and Dennis Nelson. It's June the 8th, 2020, and we want to share some things with you that we feel that are very timely. I received a letter a couple of weeks ago from someone who attended a lunch and learn that we did in order to introduce our covered call portfolio to the public. And after sitting through it and very interested in our strategy, let me tell you a little bit about this prospective investor. He says in his letter, "My personal long-term strategy is to buy and hold. This has worked for me over several decades and through many market gyrations." He then goes on to say that the reason he's writing this letter is that the unique selling proposition was your option strategy, and he was very interested in it. My point here is anyone in retirement should consider a portion of our Mapato covered call strategy as part of their objective, as part of their portfolio. And this is why. Every portfolio is allocated based on asset classifications, but very few times does the advisor say, let's put something into the portfolio that by its structure actually slows down volatility and increases income. So my question for you today would be, think of those people at the club or at the last party that you attended, maybe it was on Zoom, right? Or friends or family that you may have that are very concerned about this market, and they simply do not know where to look for something that's viable for their investment strategy. I would encourage you to get a hold of me. Share with me those friends and family that really need some help on doing well in this market because of structure. All right, we're going to go ahead. Dennis Nelson's going to give us a brief on the market. Marcus Bickle will then follow up with a specific trade in the portfolio. And for full disclosure, not all trades work this way. We do have some bad trades in our portfolio, but we'll take it with Dennis Nelson.
Thanks, John. In reference to what John was saying, we are long investors. We want to own stocks. We'll never short a stock. So, and that comes from history. When I first got in the stock market back in the 70s, the Dow Jones was 550. Now it's 27,000. Now, admittedly, that was 40 years, and there's been a lot of ups and downs since then. But how can you go against a trend like that that has been occurring over such a long period of time? So, just that added note, John. A quick note about what last week's trade looked like. It was definitely a economy opening up trade. It was really interesting to see. The Dow was up almost 7% last week. What a huge trade. And of course, Friday's announcement about the unemployment and the number of people who are coming back to work was just a blockbuster. Health stocks unchanged during all that, though. Maybe not too surprising, but but the real news was it was the beat down stocks that were rallying. We were looking at Carnival. Now, if there's an epicenter for all of this, it's got to be the cruise industry. Carnival was up 36% last week, and it's up again this morning. Now, they say that half of the people who got their cruises canceled, half of those people let their money ride for a new cruise in August or September. To me, that's amazing. Frankly, to me, now maybe I'm a demographic that isn't going to be too aggressive about coming back, but that to me was mind blowing. The other big sector was the oils. Apache oil, for instance, was up 48% last week, coming back from a disaster of deliveries and oversupply news that really burdened the market over the last couple months. That's turned around. You just don't have to get on the roads to know that the traffic is up again, demand is up. So I'm going to turn this over to Marcus. Thank you, Marcus.
Hello everyone, happy Monday, and as we've been talking about, welcome to the second phase. We are basically in full swing so far as the Florida economy goes, and it really shows. I had planned some different things for this week, but because the market was up so much, I have something happy to talk about. Now, if you remember, several weeks ago, we spoke about Boeing and what we were working with there, and how we had devised a method to work our way out of what was a bad trade. We purchased Boeing high before all of this happened, and as I'm sure you can imagine, Boeing fell on the news of obviously those plane crashes and then the complete collapse of the airline industry for several months. To what Dennis said, it has come roaring back, and we are now profitable in that trade. How did we get there? Well, we have the original amount we bought at the high. We went back in, bought a second lot of it at considerably lower, something like I think 150% lower than the original purchase. And then we wrote 2 options on them, calls for the people to take them away from us if it reached a certain price. We generated a large amount of premium on the original lot, the high amount that we bought before all of this happened. And we used that to kind of dig our way out for the next trade on the new amount that we bought, the way lower amount. We wrote a 1-year call on that for 200 and got an enormous amount of premium for it, thinking that if it goes up to 200, we're going to have like a 70% gain in that position. Well, Friday, it blew through 200, something I expected it to take at least a year to get to. But we made a bad trade into a good one. And overall, the entire trade has turned positive for the year, something we're really happy with. And that kind of highlights the uniqueness of this strategy, that we can take something that was a crushed position, frankly, and use our options to slowly dig our way and make that into a positive number for our clients. And that's really important, and I think it is important to bring up. Well, I hope you all have a wonderful Monday. Money matters, and most importantly, you matter. Thank you.